Well, hello folks, I'm L.A. Little and this is your weekly NeoTA Wrap. We take a look at these markets and we do it from a neoclassical perspective each time, asking ourselves what happened last week, what does it tell us about the coming ones. Do the show 4 times, actually not 4 times, I do it once a week every Sunday night. Broadcast at or before 10 o'clock Eastern Time on YouTube, archived there, and it's available under the channel L.A. Little. If you have a chance, subscribe. It's up in the upper right hand corner of the page there. You can subscribe, get anytime content's pushed, you'll be notified. Programming note, I will be out this week. I usually do a daily show Monday through Thursday, 4 times a week. That show will only be tomorrow night. Tuesday, Wednesday, Thursday, I will be out of the office and will not be doing shows. So I'm letting you know ahead of time. I'll remind you again tomorrow. As far as these markets in last week and what happened, let's switch over and see what we got there. We had the Fed last week. The Fed induced a nice big rally one more time. And that's been the story for ages and eons, right? Both here and abroad across the globe. So domestically, overseas, same thing. Central banks keep boosting these equity markets through their easy money quantitative easing policies. And so we have 6% on the NASDAQ now, 5% on the Russell, and we're up about 2.5% on the S&P 500. The Dow is trailing all others. As we move into the end of the quarter, and let me pull up the S&P 500. As we move into the end of the quarter, the S&P, of course, has been stair-stepping back up towards that high. That price point's 21.1959. We're sitting at 21.08, so we're only about 11 points under it. I would not, as a matter of fact, I guess I would be surprised if we do not test and probably break those highs. We had a huge volume increase on Friday. It was quad witching, so a lot of volume came into the markets as a result of that. But you can see it's a day down, day up, day down, day up, and it's been that way now all throughout this whole push on the S&P 500. Looking at the weekly chart, of course, coming back up, volume expanding as it's coming there. I would expect this to get back over the highs. If we do some projections and we look at this just from a perspective of what has happened before, we've got these on a weekly basis. We've got this projection here that would take us up quite a ways if in fact it were going to happen. We'll have to see if that happens. It's not clear whether that will take place or not. And then if we do the ABCD structure, that also points up to and above that area. So in both cases, we're looking at 2140, 2145 or so in terms of the press higher. If in fact this thing's going to extend. If we look at it on the daily, it's a little bit different because on the daily you don't have quite that extension. So if we go back, there's actually an ABCD structure really from here over that's still in place that reaches up to about, I think about 2130 or so, and that looks to be the target on this move back up here to new highs. So that's the setup on the S&P 500. Now the Dow Jones looks about the same except for it's just a little weaker, and all of these now, all of those resistance zones that were in place other than the Dow have been taken out, and the Dow still has this one retest regenerate bearish that's still in effect, but I suspect this one's about to be taken out as well. So it's really not about declines yet, it's about expansions so far, and I guess that's where our head has to be. If we look at the Dow on the weekly, you can also see it there, no difference. The big strong one has been the NASDAQ and has been the Russell. We'll look at the NASDAQ and the NDX first. Now the NASDAQ, the highs from back in 2000 are just about 110 points or so higher. So I suspect as we reach on up there, that's going to be the story that everybody's talking about. And if we come back and look at this in terms of an ABCD structure, right? This had already completed its structure on the way up. It started another one now. And if we do that one, expand it up, it's going to take us right up to that target area that we're talking about 5120 or so. So that's our 5130. That's kind of the ABCD structure. If you look at it on a weekly basis, let me pull the weekly up. If we look at it here, we actually have the range breakout that's in effect, and that range breakout is going to take it up to about that same price point. So you kind of have nested structures that are going to take it up to about the same price point, whether you look at it on a daily chart in terms of ABCD, or you look at it weekly in terms of a range trade breakout. Both of them look about the same. This thing presses volume over the highs. It's working higher. Now, if you really want to get optimistic, right, you can go to some of these other structures that are inside here that take you even up farther. I don't know that we're going to get that far. Somewhere up in that all-time high area, I suspect, is where you're going to see the sellers try to come into these markets. NDX not at the highs yet, had volume, kind of closed ugly on Friday. Apple took a big spill right at the end of the day. And so even though this is pushing up, it doesn't look nearly as healthy as it had. Still probably is going to get to that high and test it. And if we look at it on a weekly, you're going to see probably about the same thing coming up to test the highs. Moving over to the Russell. Now the Russell has been the one index that's kind of leading the rest. It's the one that's been pressing higher and telling us that everything wants to go higher. This has already finished up an ABCD structure, or it's just about there on the daily. If we look at it on the weekly, that's really where the structure still lies. And you've got an ABCD structure from this original price point that will take it up, you know, another couple percent. You've also got a nested ABCD structure here that was done, and now you've got another one that just formed that's going to take it to about the same spot. So it looks like about 2% across most of the indexes is kind of where this thing is targeting right now, just looking at the indexes. And as we come back, we'll look at a few other things that might give us some ideas about whether it's going to be this week or a little bit later when that is going to take place. I'll be right back.
Learn how to trade with the Trade with LA service provided to you by TA Today. This service includes daily portfolio and comments that are emailed to you before the market opens each morning. We provide a daily view of the markets and a model portfolio you can follow even if you work another job. Every weekend, LA records his weekend broadcasts that gives you a synopsis of the week and a prognosis of coming weeks. You will also have access to our Teach and Trade room, where LA provides day trades and teaches neoclassical concepts throughout the trading day. To get started, go to our homepage and click Trade with LA.
So as we come back here, I wanted to quickly flip our attention over to the various overseas markets, which are either at new highs or pressing new highs in most cases. Here's Taiwan, the Taipei, right? That one's pressing new highs over the swing point high, volume expanding on the way up. This thing certainly looks like it's going to go higher. If I look at the Nikkei is doing the same thing, pressing new highs, hanging at the highs, wants to go higher. If I switch over to even like the All Ordinaries in Australia, pressing up to touch the highs. The only ones that look weak, and the same as across Europe too, the only ones that look weak right now is the Sensex. The Sensex have been doing ABCD structures on the downside. Brazil had been weak, but actually got a pretty good press up and had some volume expansion, so that one's coming around. The other one that still looks a little bit weak is Toronto. Our friends up north are having a hard time getting back up to the highs. But you go anywhere else other than Hong Kong itself, we're either at highs. Here's the Hong Kong market. We're either at highs everywhere else or just about at highs. So when I look at these markets and I think about it from the perspective of, you know, what are the overseas markets doing and how are those influencing ours, they're certainly suggesting higher prices. If we come over and look at the emerging markets as a group, That's pressing back up. Looked kind of like the Hong Kong market pressing back up. It's got this high volume, wide price spread bar. I expect that's going to be problems as it comes up into that area. So the emerging markets is still a bit of a struggle, and that has to do with the makeup inside of it. The real news last week, of course, was the Fed, where they came out and Janet Yellen was fairly dovish, actually very dovish, in her press conference. Right? They took out that word that we knew they would, the patient word, setting up the possibility of raising rates at any point in the future. But then the very first line that she came out with was, just because we remove the word patient doesn't mean we're going to be impatient. It's doublespeak, folks. It's going to be doublespeak the rest of our lives, probably. And that really tore into the dollar and pushed the dollar down, because if the Fed is not going to raise rates, then why is the dollar soaring against other currencies? The very next day, it pressed right back to the highs, and then right after that, pressed right back to the lows and did it with volume again. Got under it, back over it, almost the same volume. The question here really is not whether this run is over, because we definitely have some sort of a range now. It's just a question of where that range is. Is the range here, or are they going to break this down and expand that range down farther? And I think that's the question, and that's the question that's going to have to be answered. And the answer to that question is going to have a lot to do with what happens elsewhere. And what I'm talking about specifically is all the commodities and equity markets to some extent, but definitely the commodities. Oil, gold, so forth, all of them. They're all going to be whipped around, and are being whipped around by what's happening here in the dollar. If we look at it, the dollar on a weekly time frame, here you're coming off that high with volume, and you're pressing underneath the prior bar with more volume. Again, when I see volume expansion like this, just like we saw it back here, it usually says some sort of congestion is going to take place. The very next thing you do when you see something like that is you ask, okay, where is that range going to expand to? Will it come all the way back down to here, or will it settle up in this area? And that we don't know yet. If this dollar settles in the higher area and eventually takes off again, then it just continues to be a problem for equity markets, for commodity markets. If it falls back and creates a larger range and actually goes sideways for an extended period of time, then that certainly takes some of the pressure off all these other markets. So the dollar comes off with some volume. We'll see if it consolidates right up here or not. If it does, I don't think it really changes much. If it expands down, then I think these equity markets can get a little bit more of a boost than I think at this particular point in time. One last thing to do on the dollar is to look at the monthly chart. And the dollar was coming into a swing point high. That high, 24.82. The close is over at 25.82. The volume is there as well. And so it looks to me like the dollar isn't done with its run to the upside. Pause, yeah. Done? Probably not. If we look at those other things that are affected by it, let's go to the precious metals first. There's always a lot of interest in these. Silver, we had talked about both of these, silver and gold, last week. We had said it looked as if these were going to get a good bounce, and the reason for it is silver was already over that bearish retest, regenerate zone. It tested under it. It failed to break down, right? It was a suspect breakdown. Held, right? A little 5-day consolidation down here, and then just shot up on short covering. Goes back up, it's going to test this swing point high. It's already over this swing point low. At worst, this market is in some sort of a sideways range again. And that's a big deal, because if you look at silver on longer term time frame, these things were in danger of totally breaking down. Both here, and if we look at it on the monthly, also on the monthly, right? Danger of breaking down in a big way. Now it's coming back, and we'll see if it can get back above. The key here next, of course, is can you get back above these retest, regenerate zones here? or is it just a short covering spike that gets you up into here, and that's where you actually regenerate lower? Now silver looks worse than gold on the long-term time frame, but gold looks worse on the short-term time frame. So let's look at gold next. And if we look at gold, gold also breaks down, suspect, reverses the next bar, and is back up doing a retest regen bearish on this time frame. And so gold, right, not nearly as strong as silver on the short-term time frame. It has an overlapping area here. I suspect this is where it's going to have problems, if it's going to have problems, and that will be coming up short order this week. So gold on a daily coming up into retest regen, on a weekly doing the same. You can see the low here, it broke, going to test it there. And if you go to the monthly, gold again doesn't look as bad as silver, actually holding above some of the prior lows, this one over here on April of 2010. So gold trying to put in a bottom, but it is a challenge to do so. If we look at the general commodities as a whole, they got a big bounce off that dollar. Right, here's the dollar spike and the dollar follow through, big bounce there. If we go look at oil market, the oil market was trying to break down. So oil breaks down on the daily, gets underneath it, volume expands, looks like it's going to break on a weekly and a daily. Then the Fed does the Fed thing. This takes a huge spike back up, down the next day, up the next, test again. The high on Wednesday's Fed meeting was 1678. The high on Friday, 1680. You go over it, under it, less volume, and you're doing a bearish retest, regenerate. So it's trying to regenerate lower. So it tests into it twice here, can't get over it. Oil has to get back over very quickly, otherwise this thing is going to press lower. And that is a huge ABCD structure if it does, and if it does press lower, it's going to break on the weekly. That weekly actually held last week, but just barely, but it pressed more volume as it tested, suggesting it will test again this week and try to break down. So oil is going to be a big story this week, because if oil starts to plummet, doesn't matter if the dollar holds. You're going to have another boogeyman out there pressing against this equity markets as a result. So that's going to be the story this week, if there is a story related to the dollar and related to commodities. Finally, looking at the TLT, the bonds had a nice big spike up on the Fed news, as would be expected, and they held up there the last two bars since then. Didn't really get a spike up on Friday, but they held up there against it. Got over the swing point high, so it's sideways again. The big test here, of course, is this big bar again. It's into it deep, so it should try to test the top. 132.49 is the number. It's not that far away. That will be the test. You get over that, you're going to try to go right back into the lows of the highs, which is all the way up at 136 almost. So pretty big move if it gets over this initial test. On a weekly, looks pretty strong still. On a monthly, all it looks like it did here was retest and is trying to regenerate long. And so I had some questions, I think it was Thursday, about this. This does, has put in a long tail on the monthly so far and is bullishly retesting and trying to regenerate even higher. So that's the various equity markets around the world, the aux markets that are important to us. And if we look quickly, while we have a chance here at the major sectors, I want to pop up the strong ones and then the weaks. The strong ones, of course, biotechnology. Now, Biotech had a big day up on Friday off of Biogen and the release of some FDA studies. I think it was the second trial study on some Alzheimer's disease drugs. Big spike up, big volume, but it closed near the low. This again may be one of those kind of blow off, take a break. It had already finished up an ABCD structure, and if these start to take a break, that's going to put a crimp on the NDX. And so it was already over it, right? Way over it actually. Now is it going to retrace back and try to come all the way back down in deep as a result of it? Looking at it on a weekly, pretty decent spike up in volume, nothing huge here, and on a monthly just keeps going higher. That's probably the strongest sector out there right now. That's helping, of course, the drug companies and the healthcare in general. That also got a nice big spike up. It had a breakout, what was it, May 16th, and also got the breakout here on the Feb 16th. And so this had been in a multiple swing point breakout. Actually, let me go back because they broke together. There was probably one back here as well. Yeah, here's the February one. So both of them broke out in February. This one faded back in, did a retest, and regenerated higher. Looks to me like it's going to fade back in and test again now. So nothing terribly wrong here, just the fact that these things have extended. And the problem we've talked about for some time now is there's no rotation. Unless you're looking at small caps, there isn't rotation in sectors. If we go to some of the other sectors that have been strong, here's the XLY. XLY comes back up, tests the top, and fails. This wants to pull back. This has been one of the strongest sectors. If we look at technology, the XLK went and made its highs, came back, pushing higher, has decent volume, right? But this doesn't look like it's going to, it doesn't look like it's going to carry the ball anymore. This looks like it's just going to hang and do well, but not carry the ball. To carry the ball, you got to go to something else. And so if we go look at some of the sectors that have lagged, here's the XLI. Big push up on the Fed, just faded the last couple days. Does look like it will push higher and test again, but that's not, that's not like just jamming higher. XLF, will this one do it? Well, on the Fed news, spiked higher, came back the very next day, spiked back up yesterday along with everything else. Can this one do it? If you look at it on a weekly, it looks like it's going to try to test the highs, but doesn't look like this is like the savior, does it? If we get over these highs and start to run, well, maybe it's a different story. But right now, it looks pretty tepid. And then you go to some of the ones that have really been weak, like XLE. And yeah, they've got some short covering rallies, but that certainly isn't going to carry the ball. And if we look at materials, that one isn't either. So, and transports. Let's look at transports. This has been range trading forever. Can transports do it? Well, you're getting long tails on the top. Doesn't look like that's going to do it either. So when I look across these sectors, I just don't see the enthusiasm out there. And a result of that is if you can't get that kind of enthusiasm in the sectors, then how are you going to get it in the indexes? And we'll talk about that in the wrap. But first, let's take a couple of viewer questions. Okay, as we come back here, one of the viewers, members of the site, I have a teach and trade room. I think most of you are probably aware of it. I'm not sure if I log in here. Let me get logged in. And, over on the site, if you come in here, there's a teach and trade room. And in here, I give out trades all day long along with other traders. And I also... I give specific entries and exits and so forth. We had a nice trade on the indexes, for example, this week as a result of the Fed meeting. But there was a question in here, or at least a proposed question that said something to the effect, let me just read the question. I thought you were going to say no to North's question because the XLU hasn't closed above the daily swing point lows high. I think this is the first time I heard the point made that multiple days are the swing point high. Can you comment further about this in the weekend show? There was a question that was raised, and it was like, should we buy the utilities? And I said no. And I guess what I said in rebuttal or in comments was that something about the swing point high here. Quite frankly, I don't remember exactly what I said about it. I went back to look and I didn't see the notes, so I'm not sure what I said. But just to clarify for members and also for those of you out there that aren't members or trying to learn the ways of neoclassical, when you have a breakdown, right, that breakdown, it involves the break. I mean, you can't get a trend transition. Let's start from the beginning. You can't get a trend transition unless a swing point is broken, right? That's when the transition occurs. You see it here. It was confirmed. In other words, volume expanded, right, compared to the one it was going against. So it was slightly higher in this case. That's a transition, okay? And what was the transition? Well, in this case, it actually wasn't a transition because you already were bearish. It was a reconfirmation of that bearishness. So that's not a trend transition as much as a reconfirmation, yet it did break a swing point and reconfirm that this thing wants to go lower. As it gets lower, it gets down here, makes another low, eventually gets a push back up right here, again, gets over what? Gets over a swing point high, in this case this one. That changes trend to sideways, but then the big test is the retest regenerate zone. I'm going to put it in a different color here so we don't lose track of it. So let me grab this and put it back on. So this is the retest regenerate zone. What does that mean? Anytime you break down, that prior swing point low becomes an issue. It becomes hard to get back over. And depending on how fast you come back, that push will usually succeed. The retest regenerate will succeed if it's more than 6 bars on the breakdown. Well, the breakdown was here, and if you count them up, it's more than 6 bars. So you've gone more than 6 bars before you ever come back to do the test. That test, when it takes place, typically only tests into the lower part of this zone, but with the Fed day, this one tested all the way back to the high and did it again the next day. Then it dropped back down and did a little doji. It's probably going to try to test again. And I didn't do the actual number here, but that top was 45.63, 45.65. So you go over, back under, less volume after a decent spurt. It's an over-under, not an extended 2-bar. Now, maybe you do a little bit more testing, but right now, what it's testing into, it doesn't have the volume, and it looks like it's going to fail, regenerate lower. So when I was saying that, no, I'm not interested in these, I'm not interested because the retest regen is failing. Excuse me, is succeeding. In other words, it's going to try to push lower. I don't know what I said that made you think that this swing point high was something. Maybe I was talking about the high of the low, which is what you're talking about. And so just to reconfirm, that is the test. It's this bar. It's the high and low of this bar, not this swing point high. That swing point high does transition trend, but that doesn't mean as much as long as you have this bearish retest regenerate zone that's still trying to regenerate lower. And if you look at it on a weekly time frame, and let me clean this back up, get rid of this. If on a weekly time frame, you also have the same thing happening here. You've got a retest regenerate zone here. This one comes back within 6 bars. Probability is a little bit better that we'll try to break over it, but you've got that other one that's going against you. And if we look at it on the monthly doesn't look too bad. Matter of fact, the monthly looks not bad at all. And that's usually the way it is. This came into the top of the bar of the swing point low and came into the top of the prior highs here. And there's really not much to say about the monthly, although it still looks okay. So, in summation, it is exactly what you thought it was, and that is that what's important is this retest regenerate, not whether it stayed under the high multiple bars. And I'm not sure what I said to make you think that. I really was trying to talk about this. I just maybe didn't say it very well. So thanks for asking, and that's the way that is. Okay, and I thought I had 2 questions, but it looks like I had just one, so I'm going to leave it at that, and we'll come back and consider the final thoughts. So if we think about neoclassical thought, it's a lot of new concepts, but like anything, it's built upon a bunch of old concepts. And there's a mixture of it. And one of those mixtures we don't talk about much, but which I pay attention to, is divergence. And that is everything strong or is something strong? Is everything weak or is some things weak? It's important because like when we're looking at the indexes, for example, you have a very strong small cap. That's great. That's rotation. That's the sort of thing we need. And it was a very, strong thrust back to new highs. I'm going to just look at dailies now across these. Here's the NASDAQ composite, right? Made new highs. Now this one was the one that led on the way up. The percentage move from here to here, right, compared to the move on this chart, you can see the difference, right? This didn't go as strong as that one did. And if we bring this over and say, okay, how did the S&P do? Well, it did great there. How's it doing here? Well, it came back, and I'm going to just draw them in so you can see them. It came back that far, and it's up this far now. Well, let's pull the NASDAQ composite back on that same chart. What did it do? It didn't come back as far, and it's up, back at those same levels, right, in terms of extension that the S&P is. So they've gained about the same, but it didn't come back as far, so it's doing better. Well, pull the Russell back on top of that. How is it doing? Again, came back as much as the S&P, but it's charged back up and is up above the highs as a result, right? Because it didn't go up as high, and now it has gone. It's divergent behavior on the indexes. It's not a huge problem because, as you can see, most of these have done about the same thing, right? In terms of where are they now, they're almost at the same places, but they've gotten there differently. And that's divergence between these. And that divergence is something to recognize. When there's divergence, when not all the indexes are doing the same thing, and what I really mean by that now is not just where are they in terms of price, but where are they in terms of trend. Here, Russell is at what? It's at a confirmed breakout. NASDAQ confirmed breakout as well now. This one's just sideways. Hasn't gone as far, and that's the S&P. So trend, even though it's working its way back the right way, it's not in the same place on all these indexes. Listed issues in general aren't. That's because of a dollar and the fear of earnings overseas on the conglomerates. That's what's happening. As long as these can push up and keep taking it, or as long as we get rotation elsewhere, then this market can continue to churn and make new highs and all of that business. But if they don't, right, if these really don't carry the day, then we're going to have congestion and consolidation. And my suspicion is you're probably going to see the latter more so than the former. It's not going to be, in my opinion, like it has been, and that is we're not going to see just day after day after day up, 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 new highs, 10, 15, 20% gains. More than likely, we're going to see a lot of thrashing just like we saw back here. We're probably going to see that start taking place up here as well. That's it for tonight. Again, a reminder, won't be here Tuesday through Thursday. We'll have a show tomorrow night, and then that'll be it for the week. Have yourself a great one. I'll see you then. Take care. Good night.